The stochastic indicator, a stalwart of technical analysis, has cemented its place in traders' arsenals worldwide, offering insights into market momentum and potential trend reversals. This indicator provides a comprehensive approach to analyzing price movements. Adding the stochastic indicator to your TradingView chart is a straightforward process. Simply navigate to the indicators menu on the top toolbar, where you'll find it among a wide range of other technical analysis tools. Traders can further refine the indicator by selecting the Koji icon. By delving into the settings menu, traders can adjust key parameters such as the %K period, %K smoothing, and %D smoothing period. The %K determines how many periods are used to calculate the indicator's fast line, illustrating short-term market momentum. %K smoothing, on the other hand, applies a smoothing function to the %K line, reducing noise and providing a clearer signal. Meanwhile, the %D smoothing period represents the moving average period applied to the %K line, further refining the indicator's responsiveness. Furthermore, under the Style tab, you will find options to adjust line colors, line thickness, and visualization styles to improve visual clarity and aid in interpretation, enabling traders to extract deeper insights from the signals. These different settings empower traders to tailor the indicator to their specific trading strategies and preferences, ensuring alignment with their analytical needs for precise market analysis. The stochastic indicator is comprised of two key components, the %K line and the %D line. The %K line represents the current closing price relative to the price range over the specified period, offering insights into short-term market momentum. Meanwhile, the %D line, a simple moving average of the %K line, smooths out fluctuations and generates trading signals, enhancing clarity in market analysis. One of the primary strengths of the indicator lies in its adeptness at identifying overbought and oversold conditions, along with potential trend reversals. When the %K line crosses above the %D line, it signifies bullish momentum, indicating potential buying opportunities for traders. Conversely, a %K line crossing below the %D line suggests bearish momentum, signaling potential selling opportunities, thus empowering traders' indicators to make informed decisions in the market. Moreover, the indicator excels in finding divergence between price action and momentum, a phenomenon where the indicator's readings diverge from the prevailing price trend. Such divergence often precedes an impending reversal in market direction. Traders leverage this divergence to anticipate shifts in market sentiment and fine-tune their trading strategies accordingly, positioning themselves advantageously in evolving market conditions. Despite its strength, it's crucial to recognize the limitations of the stochastic indicator to avoid potential pitfalls in analysis and decision-making. One significant limitation is its tendency to generate false signals, particularly in choppy or sideways markets. Traders should exercise caution and employ additional analysis techniques to confirm the signals and avoid being misled by false positives. Moreover, the indicator's sensitivity to parameter settings can pose challenges for traders. Finding the optimal combination of the %K period, %K smoothing, and %D period requires experimentation and may vary depending on market conditions and trading strategy. Poorly adjusted settings of the indicator can cause suboptimal performance and unreliable signals. Furthermore, the stochastic indicator is lagging as it derives signals from past price data. Consequently, it may only sometimes offer timely signals, especially in rapidly changing market conditions, which could result in traders missing optimal entry or exit points. To address this limitation, traders can enhance their analysis by integrating the indicator with leading indicators for timely insights or combining it with other lagging indicators to confirm signals.